Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the key highlight events that are expected to be moving the markets. So we'll also be diving deeper into technical analysis in trying to understand what are the prevailing market patterns and trades. We'll also be talking about the current rally in gold as well as silver. They both hit new highs as of this morning. So we'll be discussing that. And as always, these sessions do not constitute of any form of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So you can see a lot of people have already joined. You can see Kiama Muturi in the house. Good morning and thank you for joining. MK, good morning. Simon Gikonyo, Coril, Spinoza, good morning, everyone. Let's get this started. So I'll be jumping straight to the economic calendar, and this is the Forex Factory economic calendar. So as you can see, there is quite a number of things going on in the markets. First, yesterday we had a lot of speeches coming in from Fed members. So technically, we had FOMC member Waller, we had Ramsden speaking, Hamak, we had Musalem and Williams all speaking, and also US President Trump was also speaking. Then later after midnight, we had Bostic also speaking. And the general consensus in the markets right now is that a majority of the Fed members see a potential rate cut happening in the month of October, which will be the next Fed meeting. So fast forward to this morning, we had manufacturing data from China, where non-manufacturing came in at 50.0. That's the midpoint between expansion and contraction, which missed expectations of 50.3 and was lower than the previous reading of 50.3. So on the other hand, on the manufacturing side, there was a 49.8, much bigger improvement from the previous reading of 49.4 and better than the expected 49.6. So after this, we had the interest rate decision from Australia, where the Reserve Bank of Australia decided to hold interest rates steady at 3.60% as expected, leading to a rally in the Australian dollar compared to other currencies. So later on, there was the press conference on top of the Reserve Bank of Australia's rate statement. And then fast forward, we got data from Germany, ranging from import prices, which were down 0.5%. Retail sales were down 0.2%. The current account on the UK side also worsened to £28.9 billion, whereas the final GDP quarter over quarter was confirmed to be 0.3% as expected. So from that, I think the other major data point we had was preliminary CPI from France, which had a big drop to negative 1.0%. Then for Germany unemployment change, here we had a big improvement with 14,000 jobs created in the past month. This was better than the expected 8,000 and better than the prior month's drop of 7,000. So going ahead for the rest of the day, we'll be focusing on a speech by FOMC member Jefferson at 1 p.m. Then another member from the UK Monetary Policy Committee, Lombardelli, will be speaking at 2:50 p.m. Another speech from ECB President Lagarde at 3:50, and then 4 p.m. FOMC member Collins. Then another UK MPC member Mann speaking at 4:25 p.m. So today is basically dominated by central banker speeches. So we'll also be getting a speech from US President Donald Trump. MPC member Breeden will be speaking at 6:30, and one other Fed member, which is Goolsbee, will be speaking at 8:30, and again at 10:30 p.m. So clearly, there will be a lot of central bankers presenting speeches today. So we'll be closely following on that. So the idea when you're following the central banker speeches, you know that these guys are the ones that vote during monetary policy meetings. So when you have a data tracking their sentiment, if for instance there is 9 members voting on monetary policy committee in the UK, and you see a majority of them, let's say, tilting towards rate cuts, then that increases the odds for rate cuts, and you can interpret that there is a potential that they will vote similar to their speeches. So this way, when you get out of FOMC members speaking, these days it's much easier, especially considering that you have Chat GPT. So, for instance, if the speech is on YouTube, you can copy the video transcript. All YouTube videos in English have a text transcript. Just copy that transcript and then put it on ChatGPT, and then it will highlight a summary and give you the key points. So this way, you're able to analyze different Fed members and know what they are projecting to do on their next meeting. So I really hope that helps you in making your analysis simpler. So the main event for the day in terms of data points will be the JOLTS job openings. Remember, this is the non-farm payrolls week, which means that even tomorrow we'll be having the ADP non-farm payrolls and non-farm payrolls on Friday. So JOLTS job openings are expected to slightly tick up higher from the prior reading of 7.18 million jobs to 7.19 million jobs. So remember, this data tracks the the number of job advertisements in the US economy. So when the economy is looking to expand, then companies are basically advertising for more jobs. And in that case, it tends to be a very good leading indicator of the health of the job market in the US. So in a well-performing economy, the number of job openings tend to be on the rise. And in that case, you know that there is more employers looking for employees, meaning that employers are planning to expand their business activity. So on the other hand, if there is a fall in job openings, then that basically indicates that the economy is not doing as well as anticipated. And that has been the path since the peak that we saw in 2022. So clearly, what we are seeing here is these job openings reducing time over time. So save for the last couple of months where we have seen some form of improvement. So notice, for instance, from April's low, we had an increase in June and then July before we saw a drop happening in the month of August. Sorry, before we saw this dropping in August. So clearly, we could be seeing a much weaker job openings report given the track record we have been seeing since the year started. So a weak job openings report would mean that the job market is worse than expected. And since the Federal Reserve Bank of the US has two mandates, one to maintain stable prices and targeting inflation at around 2%, and the other mandate is to ensure full employment, then a worsening job market would force the hand of the Fed to consider a more aggressive rate cutting cycle. So in this case, it will be a key data point, and we expect it to be a key driver in the markets at around 5 p.m. So this on top of Trump's speech, which will be happening at 6 p.m., will be the key drivers, especially for US dollar traders, US equity indices, gold, as well as silver. So those that will be our key focus for the day. And as I've already mentioned, if we see a worsening job market, that would mean more rate cuts and a weaker dollar. And rate cuts tend to be positive for the stock market. So we could be seeing stocks flying higher on the back of a weaker dollar. So if we happen to see a weak dollar this afternoon, also gold and silver could extend their rallies that they started this morning. So that's the analysis on the key data point for the day. Then we look at one key highlight, and this is pertaining to what's currently happening in the US economy, and that's a potential shutdown. So if you're very new to trading, you probably never had or experienced a US government shutdown, If you experienced in the trading markets, then you have probably experienced too, especially in the last time that Trump was president. So if you have ever experienced a government shutdown in your trading, kindly respond in the comment section. Let's see if you have ever been into such a scenario in the markets. So I can already see that there's a request to check on pound USD, Euro USD, and gold. Definitely we'll be covering that. So just keep, just lock in and we'll get there. So just give me a sec. All right. So I'm trying to find this article here. But most importantly, let's begin by looking at what is a government shutdown and how has it historically affected the US dollar as well as equities. So this is straight from ChatGPT. So a US government shutdown occurs when Congress fails to pass funding bills, or what we call appropriations, to finance government operations and agencies. Essentially, parts of the federal government stop functioning and non-essential federal employees are furloughed while essential services continue. Shutdowns happen because of political deadlock, often over budget priorities or policy disagreements. So, currently, as we speak today, we know that yesterday the US Congress was unable to agree on a funding bill, mainly because the Democrats are pushing for funding in healthcare, and Trump is trying to reduce that kind of funding. And as a result, they cannot agree on the bill. And if Congress cannot agree on a financing bill, then no money can be spent without law backing it. So this basically means that the US will have to go on a shutdown. And a shutdown means that all non-essential employees will have to take on a compulsory leave. So if, for instance, you're in a department that is not considered essential, let's say like historical sites, museums, libraries, all those government facilities will be closed down, and only the essential government employees will be working. People like, let's say, border control, military, police, and so on. So non-essential federal workers are followed temporary unpaid leave. So essential services continue like military, air traffic control, and law enforcement. So government services like national parks, visa processing, public-facing agencies may close or slow down. So the historical effects on USD and US equities. The impact depends on duration and market sentiment historically. So, for instance, for the US dollar, on the short term, it often sees minor strength or stability because shutdowns are temporary and the US government or the US Treasury still issues debt to cover obligations. So, in case you get a prolonged shutdown, a prolonged period where Congress can't agree on a bill, then you can see a weakening of the USD as confidence in US fiscal stability drops, raising concerns about default risk. So, an example, in 2013, the government was shut down for 16 days, and the US dollar initially weakened versus major currencies, but effect was modest and short lived. Then in 2018 2019, the shutdown lasted about 35 days. So there was slight downward pressure on the USD, but Fed policies and global economic factors dominated currency movements. So on the equity side, that's the stock market, there was short-term volatility. Markets dislike uncertainty. Stock indices may dip slightly during the early days. So on the sector impact, we know that there are companies that rely heavily on government contracts. So those companies that deal directly with government, of course, their revenues will be impacted. These also includes defense and federal dependent industries, which often take the hardest hit. So on the consumer sectors, they can also suffer if confidence drops. So on the path to recovery, once funding is restored, that is, once Congress finally agrees on a bill and approves, markets usually rebound quickly if no other macro issues exist. So this means that if there is a big drop in the stock market as a result of a government shutdown, what we should be expecting is a very quick recovery once Congress agrees on a funding bill. So an example, in the 2013 shutdown, the SP 500 fell about 3% during the shutdown and then recovered fully afterward. So in the 2018-2019 shutdown, equities were volatile but long-term trend unaffected. Tech and consumer discretionary were relatively silent. So I hope that makes sense. And now we look at the key highlights on different articles. So Wall Street left in the dark on US data if shutdown happens. So the main focus for traders and investors is the Bureau of Labor Statistics and other statistics bureaus. So for all the data that we get on the economic calendar regarding the US economy, that is official data coming from the government, we know that those departments will be shut down. So a statistical um, data agency in the US is not considered as essential. So if the government shuts down, even this Friday, we may not have the non-farm payrolls. And that's the trouble that is lacking in the markets. So that is expected to happen by tomorrow at 1 p.m. New York time. So if by tomorrow at 1 p.m. New York time, Congress, if it has not agreed on the funding bill, then the government will be forced to shut down. And once it shuts down, the statistical bureaus will be closed and there will be no non-farm payrolls this Friday. So of course, this tends to cause short-term panic, and you have to be prepared for this. So Wall Street is preparing for disruption to economic data if a looming US government shutdown goes ahead, which could cause investors to rely more on alternative data or take on more defensive positions as they anticipate volatility in asset prices. So the US Labor Department said on Monday that economic data releases would pause in a government shutdown, amplifying investor concerns that Friday's monthly employment report would not be published as scheduled. Such a delay to the closely watched report could cause confusion for investors, including how to assess the Federal Reserve's upcoming interest rate decisions. So we know that the Fed depends on this data to make decisions. So it will be a very tough time for the Fed if the US government happens to go into a shutdown. And we know that these are very sensitive moment. The Fed is going data point by data point, looking at growth numbers, that is GDP, looking at sentiment, especially inflation expectations. They're also looking at inflation reports. They're looking at manufacturing, they're looking at services, jobs, and all these data in order to make an accurate decision about interest rates. So if these organizations collecting the data get shut down, then it puts a lot of uncertainty in the Fed's next decision, and that may cause some panic in the markets. Of course, we'll be closely watching and reacting to any new updates. So this means that it's highly likely that this afternoon's speech by Donald Trump may mention something around that, and we'll be closely watching to see how it may impact the markets this afternoon. So on other news, Trump tariffs live updates. Trump announces fresh tariffs aimed at softwood timber, lumber, and upholstered products. So that's the latest on tariffs. So tariffs on softwood timber are at 10%, alongside a 25% tariff on certain upholstered wooden products. So clearly, more and more tariffs are being implemented, and the last decision he had made on tariffs was 100% tariffs on movies that are not made in America but are sold in America. So now even more tariffs coming into the markets basically increases the expected or implied volatility in the markets. So yesterday, Trump shared a tweet around cannabis, and that led to a very big rally. For instance, Tilray jumped about 60%, not 50. That is after he posted the CBD video. CBD short for cannabinoid oil. So shares of cannabis stocks rallied on Monday after President Donald Trump shared a video promoting putting cannabidiol or CBD under Medicare coverage. So other adults are suffering needlessly, said the narrator of the nearly 3-minute video produced by the Commonwealth Project, an initiative pushing to make medical cannabis, including CBD, accessible to seniors. Hemp-derived CBD can make them feel better, live longer, and improve their quality of life significantly. So the Amplify Alternative Harvest ETF climbed as much as 26%. This is an ETF that tracks cannabis stocks. So shares of Tilray Brands Incorporated gained around 60%, while Canopy Growth Corp and Kronos Group also surged. So that is a key development in the market today. So still more updates on the potential government shutdown. President Trump met with Democrats in the Oval Office on Monday, but both sides left the talks indicating they had made no progress on striking a deal that would avert a government shutdown. So lawmakers have until Wednesday at 12:01 a.m. I had mentioned 1 a.m., so it's not 1, it's 12 a.m. Eastern Time to reach an agreement, or else partial government shutdown is set to begin. I think we are headed to a shutdown, Vice President J.D. Vance said after the meeting. If a stoppage goes forward, in addition to mass firings and chaos at the airport, the government is set to cease publishing economic data at a time when the Fed and Wall Street have a particular need for it. So the Department of Labor said its Bureau of Labor Statistics would completely cease operations during a stoppage, with just one of 2,055 full-time employees continuing to work, probably a security guy. So Wall Street and Fed are anxious to receive Friday's release of the September jobs report as scheduled. A slew of mixed economic data has shaken confidence in the Fed's expectation of 2 more rate cuts this year as a sure thing, especially as apparent divisions emerge among policymakers. So despite gridlock in Washington, along with new tariffs announced by Trump on Monday, stocks inched up to start the week. Looking forward to Tuesday, Nike is expected to report earnings after the bell, and investors are set to receive the latest data on job openings from the BLS. So that's the latest on what's currently driving the markets. Then there's a firm that announced that they will be adopting a crypto strategy, and their stock rose by 959% on their crypto plan. This led to the SEC halting the stock. The company name is QMMM Holdings Limited. So it's an advertising company. Shares went almost 100% in less than 3 weeks, saying that the digital media advertising firm's stock may have been manipulated by touts on social media. So recommendations on social media by unknown persons to buy QMMM may have manipulated the share price, the SEC said on Monday. The regulator did not say when the posts were made. The SEC said the suspension was temporary, ending at 11:59 p.m. Eastern Time on October 10. So other than that, on the currency side, we know that the Asian pairs have been the biggest movers this morning, especially after the interest rate decision not to cut rates by the Reserve Bank of Australia. And now the Australian dollar has gained by 0.53% against the USD. New Zealand dollar, which tends to be positively correlated with the Australian dollar, also up 0.47% against the USD. JPY up 0.41%, and the smallest mover is the Canadian dollar, which is slightly up by 0.04% against the USD. So Other than that, looking at other highlights in the market, China manufacturing PMI hits 6-month high. So the rating dog China manufacturing PMI rose to 51.2 in September from August 50.5, surpassing forecast of 50.3 and marking the highest reading since March. So new order growth hit a 7-month high and exports returned to expansion. Separately, official figures showed factory activity shrunk for the least in 6 months, supported by hopes of fresh government support measures ahead of the October plenum. So, of course, on the oil side, it keeps extending the decline that we saw yesterday. WTI futures fell towards 63 per barrel on Tuesday, extending the previous session's losses as traders weighed the prospects of larger global supply and the potential for a Gaza ceasefire. So, besides that, I'm trying to see if there's anything else I may have missed. So, just give me a sec. Yeah. So, next, okay, let's look at the US debt clock just for your viewing. The US debtclock.org is a live update on US live debt or real time debt. And currently it's at $37.5 trillion. And by next year, it could hit $39 trillion, given the massive budget that Trump is looking to implement. So the US usually has a debt ceiling, and in order for them to approve new budget, they have to approve an expansion of the debt ceiling. So that's part of the negotiations currently happening since yesterday. And of course, they almost always push the debt ceiling higher. And once they push the ceiling higher, then they implement massive spending. And as a result, we tend to see some of this money ending up in stocks as well as in commodities and housing and all these other sectors of the market, including crypto. So whenever there is a massive expenditure by the US government, this money tends to end up in different asset classes, and that tends to expand the bull run. So in this case, it's no different. So eventually, once Congress agrees on a budget, we should be expecting to see stocks running higher. So speaking of stocks moving higher, there are key highlights in the markets. I'll just give you an example. So TLA Brands, a company that mainly deals with cannabis products, is up 60%, and this was just on Monday. And year to date, it's up 26.71%, meaning that it had dipped and it's now on a recovery path. So good chance that we see some further performance. So other cannabis stocks include Canopy Growth, which is up 17%. That is as of Monday. Then we have Tesla stock. This is a stock I discussed on the latest episode of the Bullish Banter podcast. Mentioned that there is a good chance that it rallies 20 to 30%. And since then, since we did that recording, so far it's up 16.86%. This is within the last 1 or 2 weeks. And you can see that most of the Tesla trading, it had a big drop at the early months of the year, about 50%. Then we had a recovery, yet it wasn't full recovery. So only 2 weeks ago we had full recovery, and now the stock is about 16.86% higher than the opening price at the beginning of the year. So good chance that bulls are coming back into Tesla stock. So we could be seeing some more performance. So we also have Robinhood Markets. This is the best performing stock on the SP 500. We know that Robinhood is a trading app, and a lot of US traders tend to use the app. And so far, the company is up 246.65% year to date. So this remains a very, very strong performance for trading app. If you look in comparison, for instance, you look at Coinbase, yes, it was up 6.85%, but year to date, it hasn't reached such levels. So year to date, Coinbase is up only 29.85%, and in the last 5 days, 0.19%. But yesterday, it rallied 6.85%, which means that there's a good chance that the investors are rotating across different sectors. So, Palantir Technologies is a company that generates most of its revenue from government contracts. So, this means that if there's a shutdown, it could be a candidate that could be impacted. So far, the stock is up 137.88%. So, if there is some panic selling, it may create an opportunity for buyers to find the stock at much cheaper prices. So, that being said, I believe it's time we jump into some technical analysis and try to understand what are the prevailing market patterns. So kindly give a sec. So this is called the MetaTrader 5 trading application. It's the app that you use for trading on desktop. You can download it on Play Store. You can download on fxpesa.com website, and from there you'll be able to trade different asset classes, ranging from forex or currency pairs. You're able to trade futures. You're able to trade bonds. You're able to trade US and EU stocks. You're able to trade all kinds of indices that are listed on exchanges. You're able to trade agricultural commodities, you're able to trade gold, oil, and many other assets. So make sure to download it and check out all those assets available for trading. So the first chart that you see on your screen is the chart of gold, which basically hit a new all-time high this morning after hitting another all-time high yesterday. So yesterday it was almost a vertical movement, and then today an extension higher to a high of $3,872 per ounce of gold. So what we are seeing here is a pullback, perhaps some form of panic selling. You can see how strong the red candlesticks are. So if you are on your charts right now, the most likely outcome is that gold extends the bearish momentum. So there's a good chance that we erase all the progress we made yesterday, and we see the market extending to the market opening price. So this is where the market opened yesterday. So if we hit the high that we had seen last week here, then gold could potentially extend this sell-off. Given the intensity we are already seeing with the red candlesticks, we could be seeing the market extending to 3670. However, the very short-term target that is most likely is 3,791 target level, given the intensity of the sell-off we are seeing right now. So silver, on the other hand, also had a big rally last week. So this week, if you look at Monday's price, we got to a ceiling and the market was unable to break that ceiling for a long time. So there's multiple instances where silver was attempting to break towards the upper side, and in each instance, it was failing. So if you look at this path here, you'll notice it's more like a rectangle, like a triangle. And now we got the breakout and the market is headed for the base of the triangle. So here we are looking at yesterday's opening price, and we are almost there at 46.013 target level. So if we happen to breach that area and we move lower, then we should be looking at levels around 45.228. However, for now, the very short-term target is 46.013. So good expectation that we get to this area here, which could be a demand zone. But then if we breach that area, then the next available area would be around 45.228. So on the oil side, as I have been mentioning week over week, whenever we see some very strong bullish momentum, the idea is to keep looking for short selling positions. Main reason is because supply is only increasing. The OPEC plus countries have been producing more. Trump is producing even more. So as a result, even if we see short-term rallies, they are almost always met by a big selling, and this has been the order of the day for the last what I would say for the last, let's say, from the month of June. So from June, anytime we see a big pump in Brent oil prices, the idea is to look for short selling positions, and now we are approaching a key level support. So the key level support for oil as of right now is the beginning of this big move upwards. So if the market started here and rallied all the way up, and now we're experiencing a big sell-off that has lasted 2 days. Today, we can say it's arguably the third day. Then I expect this sell-off to extend to $65.655 per barrel of oil. So on the US equities side, we know that they have been on recovery path. So after the big 3-day sell-off, I remember last week we mentioned that we are approaching areas to buy. So even though it was still strongly bearish on Thursday, we eventually found support, and Friday we started moving higher, Monday even higher, and now today we have fresh concerns. So while we didn't get exactly to the price point we wanted, that is a new high, we had a sell-off yesterday in the evening, and today we could be seeing some weaknesses, especially if there is a chance that the US government goes into a shutdown. So we could be seeing the market dropping to previous lows. So it's a theory that we are yet to establish. So by tomorrow we'll know for sure. And of course, you trade what you see. So it's the same thing. We expected a very strong recovery and get to the previous high. However, yesterday in the evening, after the talks collapsed between the Congress members, we saw a big drop, and today it seems like the stocks might be negative for the day. So we'll be observing that closely, and even for the SP 500, we expected a track back to a new high, but now from yesterday in the evening, some slight sell-off. But then today it seems like we might continue seeing this, especially if the Congress members don't agree on a deal. So Bitcoin, on the other hand, has had its moments. We have been seeing more of a bearish momentum kind of correction. So we mentioned some time back that this is a gift. Bitcoin being down 13.81% from recent highs means that there is more opportunity to buy at lower prices. But now, with the correlation between stocks and Bitcoin, after hitting this resistance area and failing to build momentum higher, now it seems like we are poised for Bitcoin moving further back downwards. So remember, this is an asset that is able to move 3, even 10% within a day. So you have to be careful with the volatility in Bitcoin. So on the other hand, if you are a long-term holder, buy and hold, the volatility will not be of essence to you. So as for the currency, with the interest rate decision, that's the Audi USD. This is where the Reserve Bank of Australia decided that it's not cutting interest rates, and this led to a very strong rally in the currency. However, as we got into the London session, there was a sharp drop, grabbing liquidity from the Asian session lows, and now we can see that that did not last long, and the Audi USD is pushing even higher. So Wednesday's high was around 0.66247, and I expect that the market will be extending to that level. So I expect this bullish momentum to extend even longer, get to the Wednesday's high, and potentially move higher than that. So if you go to the 1-hour chart, you know that we could be headed above this resistance area and move further upwards, looking to get into this range of the prior highs. So for pound USD, I know there was a request to check on pound USD. We always check on it. We are witnessing a market that broke a major trend line on the 4-hour time frame on its way down, got to a key level support. Notice the coincidence between this low and this area here, and then later towards the end of the week started bouncing. That was on Friday. So Monday we moved higher, and today we are moving even higher. So this implies that the pound may be regaining its strength against the USD, And just like in earlier sell-offs that we have seen, the pound has eventually rebounded very well. So in this case, there's a good chance that we break above yesterday's high and then move on a journey to the next potential target, which will be an area around here. You notice the interaction of this chart around this area here, which likely implies that this could be the next target, 1.35131. So for Euro USD, it's the same thing. We broke a trend line, a key level trend line on the 4-hour chart, a sharp drop, but it did not hold for long. So what we are seeing here is a very strong bounce on Friday and Monday. And today being Tuesday, we could be headed for 1.17833 price action level. So good chance that we see the market testing this area today. So for USD trading against the Swiss franc, you can see that an attempt to break towards the upper side. Notice it was a key level resistance here, appearing on the upper trend line. And once we go to that area, the market reversed immediately. So after the reversal, you can see the attempt to move higher yesterday is only being met by sellers, which implies that this chart is headed all the way down to around 0.79158 price level. So for dollar yen, we are right back to where we started, an over 10-week sideways range in USD JPY. So an attempt to break towards the upper side happened to had quite some extension. Then on Thursday, Friday, we got back down, and today we got back into the range. So short term, we can look at mid-range target around 147.343 and full range targets all the way down. So given the volatility that we often see in USD yen, good chance that we head all the way down. So for the Nikkei 225 index, we were tracking this triangle last week. Eventually we had a break happening on Friday. Then on Monday, even lower. And today we are extending even lower. And of course, we know that in such kind of setups, you target the bottom of the bottom of the pattern. So we are already there. The market has already hit there. So now we observe what happens with the USD around this area. If there's a break, we keep moving lower. If there's a bounce, then we start looking at retests of the previous session's high. So for the UK 100 index, here the market got out of a range, rallied to a resistance area that we had been waiting for. And once it got there, immediately it failed to break and moved further back downwards, which implies that that the UK 100 index could be headed way lower than the current price action level. So looking at the news, it's also a currency pair that had to test key level support, broke towards the lower side, but did not maintain the bearish momentum. And now what we are seeing in this market is more of a recovery pattern. So from the 4-hour time frame, you can tell that there was something cooking around this area here. And now that we are seeing a bounce, and we know that this is our other resistance area. So I'll try and zoom out. So sometimes I'll do a trend line that crosses through candlesticks and you're wondering why. Sometimes I try to do a line of best fit. It's not scientific. It's trying to understand the entire price action holistically. So in this case, we are seeing a very strong bounce. It might not head straight to the upper trend line. It might struggle. Notice how in this case, it wasn't a straight move all the way to the upper trend line. It took a lot of time. In this case, a span of about 4 days. So you might see some pullbacks playing around this area here, but eventually we know that the journey is higher. So from the 1-hour time frame, if you compare, then you can see that this Wednesday's high is where we had a big move starting. So if the price is correcting towards where the big downward move started, then the target for our day should be right there at 0.58291 price action level. So now moving on to European equity indices, we have the DAX. That's the German stock market index, DAX 40. So it managed to break above this area here last week, pull back, and now it seems to be pumping again. However, this is still mid-range. I wouldn't say it's close to the very best of entry points, but you can observe that this was the session high yesterday. This was the session low yesterday. And from what you can see, or from what you can gather, is that the market went for the session low of yesterday, bounced away from it, and is now moving higher, which means that now we could be likely seeing the market head for yesterday's session high. So for the EU 50, we've managed to break above a key level resistance. Market trended higher, pulled back today, and retested the area successfully. And what we are seeing here is a bounce from this area, which would likely imply that the market could be headed for the Asian session high, which we had experienced yesterday. So for the France 40 stock market index, also we had a big sell-off at market open. But from what we gather, it seems like a quick trip to a key level liquidity area. And now we get back to where we started. So perhaps the day's high could be a target here, potentially seeing the stocks recover to where the day had started. So Swiss stock market index got some good key level support, and now you're seeing more bullish momentum. So also we expect further upside momentum. Same thing as the Norway stock market index, which also had some form of liquidity grab and is now pumping higher. And lastly, the Netherlands stock market index, which was strongly bearish in the morning, but now we are seeing a reversal, which implies that we could be headed for the high of the day, or right where the downwards move had started. So that's it for the day. Thank you very much, everyone. Thank you for your time. So I'll be checking the comment section to see if there's anything I may have missed. So for those who are new, these sessions happen daily from Monday to Friday at exactly 11 a.m. So you can watch live recording, or if you miss it, you just come back and watch the recording. So you go to the FX Pesa channel, click live, and the most recent video will appear there. So other than that, we also have trying to find where we have the novice to pro course. Should be somewhere. So if you're a beginner in trading and this is your first time, just go to playlists on the FX Pesa channel, and then find this course called the Novice to Pro with Rufus Kamau. It's only 10 episodes and you get to learn a lot. For instance, you can already see that about 45,000 traders have gone through the introduction episode. So go through the entire course, practice the ideas they are in, and basically improve your trading game. So next, we have the Bullish Banter podcast. Our latest episode features myself and Jesse Ogora, my co-host, where we get to talk about Bitcoin, gold, oil, Fed cuts, stocks, and many other things. So make sure to check it out. Leave us a comment, share the podcast with your other trading community, and we'll always appreciate this. Remember, we also had an episode with Miss Gathoni. It went really well. Also, you can feel free to check it out, and also know that more episodes are coming in. So on top of that, we have other things going on. So if you go to the FX Pesa website, you click on products, you're able to see the products that we offer for trading, ranging from forex pairs, shares, indices, commodities, and ETFs. So you're able to see explanations on the different items. Besides that, we have this set of articles called Trading One-on-One. Learn to trade online. So whatever you might be going through is something that we probably already wrote about and published on our website perhaps an year ago or two. So understanding market and trader psychology, optimizing your trading calendars, understanding the role of central banks in financial markets, indices trading, commodities trading, major, minor, and exotic currency pairs, order types, anything you want to know about trading, we have most likely written about it. So we have covered the basics from introduction, we have covered risk management. So here, how to build a trading plan, target profit, common mistake to avoid in trading, position sizing, risk reward ratio, practicing with trading demos, take profit explained, stop loss, and many other things. We also have market analysis articles ranging from risk sentiment, leading versus lagging indicators, introduction to technical indicators, candlesticks, chart patterns, earnings reports, and many other articles. So if you don't have a trading strategy, we have covered you as well. So ranging from day trading, momentum trading, scalping, swing trading, trading news and events. The trend is your friend, the range trading strategy, breakout strategy, and many other strategies. So make sure to check it out, share some feedback. Let's get to grow together. So that being said, I'd like to take this moment to thank everyone, especially those that join us on the Blankets and Wine Bullish Banter experience. We are really happy to meet and interact with other traders on the festival. Also, to notify you that we have an offer. The offer is 100% deposit bonus, capped at $5,000 for every first-time depositor. So let's see. So on the question side, will there be rate cuts? Will the rate cuts continue, or the economical data expected this week will determine their outlook? So as I mentioned, if there is a shutdown, then most likely there will be no economic data to reference from. So that's a critical challenge, especially for the Fed. However, there's still more things that could happen. A shutdown could last one day, could last a week, could last a whole month, or even several months. We don't know, so that's why we keep tracking the live data. So if there's panic in the markets, most likely there will be an extension in the gold rally. So there's this bill in Kenyan Parliament about crypto regulation in Kenya. Will it affect you guys or brokers in Kenya? Well, I expect that most likely brokers will not be affected, because for us, we handle margin trading. So our clients deposit either Kenya shillings or dollars and withdraw Kenya shillings or dollars. So since we don't handle deposits and withdrawals of crypto, then we will likely not be affected by such a bill. So that's it for the day. I don't think there's a question I have missed in the comment section. Thank you very much, everyone. If you're watching this on X, remember to like and retweet. If you're watching these on YouTube, remember to like, subscribe to the channel, and if you have any follow-up questions, then make sure to bring those questions to the Bullish Banter community on Telegram. This is a community of traders where we get to discuss markets, podcast episodes, and many other things related to investing and trading. So consider it your trading community where you can get in, ask any question about trading, analysis, or even news, and we will be there to respond as a community together. So that's it. Adios. Enjoy the rest of your day. So the link to the Telegram group is on the comment section. I've just dropped it. So make sure to check it out, click, and join.